Hey, what's going on, everybody? My name is Ryan. Thanks for joining me. Today, I have a very special guest. His name is Dan McKenzie with the McKenzie Law Firm. He is an estate planning attorney and also a business attorney. And today, we're going to be talking about a really heavily talked about topic, and that is putting real estate into LLCs and when you should do it, when maybe you shouldn't do it, why you should do it, all that stuff. So, I'm just going to jump into it right here. Dan, you are the attorney. Why don't you tell us, should we put a rental property into an LLC?
It is probably the most common question I get from people who own rental properties. And my general answer is yes, but then there's probably a lot of questions beyond that. And just to take a step back for one moment, some people aren't entirely sure what an LLC is. And so it's just a very simple company set up under state law. And LLCs are really popular these days because there's so little work you need to do to set one up. And that's kind of its benefit and also can be its downfall. So in Colorado, where you and I are, setting up an LLC is just a matter of letting the Secretary of State know with a very simple form that you fill out called your Articles of Organization. You file that document with the Secretary of State right now, and usually it costs $50 to file that document, and it's instantaneous. You get an immediate stamped copy back, and once you've done that, technically you have a limited liability company. Sometimes when the state has more funds than it knows what to do with, we've had times where you could actually register an LLC for as little as $1. Usually it's 50, and even 50 is pretty darn cheap, but it's different from state to state. But anyway, so once you have your LLC, that's it. You really don't have to do a whole lot more to tell people you own a company. The problem is, because it's so easy, people often stop there. And so I get people in my office who did that process, set up an LLC, and then really haven't done anything else and think, okay, I've got this company out there. My company protects me. It's separate from me. And so that's all I need to do. And that's usually not right. And so that's where my conversation with them is usually picking up.
Okay. Yeah. So, obviously, setting up, just paying the $50 for the LLC, so simple. Definitely, that's not all you should be doing. There's a lot more. But can you go into why somebody would want to put their rental property into an LLC?
The primary reason, well, from my perspective, the primary reason is for asset protection. And what that means is if you ever get sued, the more separated out assets are from you or in other entities or other trusts or whatever else, the more they are insulated from each other. And so what happens is people have a rental property. Let's say they just own that rental property in their own name. They haven't set up an LLC. The checks are written to them. They deposit it in their personal bank account. That's really easy, right? I mean, there's nothing they've done. They don't even have to file that form with the Secretary of State. Right. They don't have to pay the $50. There's not really much complication as far as any taxes go. They just declare that income on their taxes, and I can let you kind of talk about that a little bit more. But it's just super straightforward. The problem is because it's under their name with everything else that they own, if a tenant at that property gets mad at them, either because they've injured themselves on the property or they're upset with the lease in some way, or they feel like the landlord is not providing services they're supposed to provide, of course the remedy is they sue, and they sue the owner of the property. Right. And because that property is mixed in with every other asset the person owns under their name, all of that is at risk, right? So if a judgment actually gets entered that has to be paid, and that person's coming after you to get that judgment paid out, all your assets are available to them. What an LLC is supposed to do is, you've set up basically this separate thing from you. And legally speaking, it's not you. It's a company. It's the analogy I always make is like, Steve Jobs and Apple were two different things, right? When Steve Jobs passed away, Apple did not. Apple continued on because Apple was not Steve Jobs. So that's what you do with your LLC. It's this separate thing from you. And so in the previous example I discussed there, if they sue, if they're unhappy, now the owner of that asset is an LLC. And they sue that thing.
Mm-hmm.
And maybe the LLC only owns the rental property and maybe a little bit of cash in a bank account, but otherwise they're really, they're not supposed to be able to come after you. That
Right.
corporation is supposed to be, or that company is supposed to be a separate entity from you, and you're not the owner anymore. So that's what the LLC hopefully accomplishes. And I say hopefully because, as I mentioned earlier, sometimes the ease with which you can set up an LLC and the minimum level of formalities you have to go through. Back in the day, the reason LLCs were even created in the first place are relatively recent, actually. Like corporations are really go back a long way, right?
Yeah.
If you wanted to set up a corporation, you could do that hundreds of years ago. The LLCs are within the last 50 years. And the reason they got created in the first place was because it's such a pain in the butt to set up a corporation. You've got bylaws, you've got boards of directors, you've got annual reports, you've got separate tax returns. Your income, for certain corporations, of course, gets taxed at the corporate level, and then when it gets distributed, it gets taxed to the people who receive it. So there's just all kinds of things that corporations, you really got to have a pretty robust business to really justify that level of hassle. And obviously having a rental property is not like that. So the states began developing these LLCs, and they don't have all that stuff. Like I said, if you file your articles of organization and submit a periodic report every year with your Secretary of State, you have an LLC.
Yeah.
The problem is that, again, go back to the example where your tenant is suing you or suing your LLC. And let's say the LLC is holding a couple $1,000, right? That's what you keep in there at any given time. It's, a month or two of rent, and otherwise it holds the house that is the rental property, and that's about it. And you get sued for some sort of personal injury on the property, and it's a couple $100,000. Well, what you're going to want to tell that plaintiff is, I know you just got this judgment entered against me for a couple $100,000, but the LLC has $2,000 and $10,000 of home equity, so it doesn't have it. So sorry, I can give you $1,000 if that's good. And your tenant is obviously not going to be very happy about that, and they're going to say, this business is fake. It's just you, and all you've done is file a $50 form with a Secretary of State. Like, that does not mean you get to avoid all liability.
Right.
And if they take that to a judge, and a judge asks, kind of looks at the situation, they're going to look at it and be like, okay, is this a business or not? And like a single member LLC that's just you, it kind of doesn't look like a business if really put to the test. You have to maintain separate books, separate files. You have to let everyone know that you are dealing with, that you are operating as an LLC. You have to have properly capitalized it when you set it up, like putting a couple bucks in a bank account and saying you've got an LLC now is going to be a problem. So there's all kinds of things that a judge will look at, and if the judge is feeling like, this was just an alter ego for you, it wasn't really a separate thing from you. You've mixed all your assets. You buy your groceries with the bank account that's supposedly in the LLC, and you're taking personal checks from the renters, and it's just a big mess that I can't untangle. This is you, and so since it's you pay the judgment.
Yes.
So you now have no protection, from your LLC. So, like I say, the simplicity of LLCs is great. It can also be the downfall. And so, if you have a single member LLC, it is a slight step up from owning your rental property as yourself. But it is especially important that you go above and beyond just filing the articles of organization, and actually do really be disciplined about keeping separate files, really be disciplined about having a separate bank account that you don't use for any other purpose but the business purpose, that you don't commingle, assets between the two entities, and that you really treat it like it's a separate entity from you. And if you do all that, it has a much better chance of working.
Right. Yeah, I agree. And our firm just actually got done with a litigation lawsuit where we were the ones, our client was the one suing somebody who had like 9 or 10 entities, but they were all commingled, and they hired me to prove that it was all commingled, and they got totally screwed. Like, you know, everything was alter ego. Everything was, you know, all the liability came upon that one person. So, yeah, definitely keeping things separate is super important.
Yeah, but that's a pain. so, so I mean, like I have a client who we said like has like between him and his girlfriend, like they have like nine separate rental properties. Sounds like a similar situation. I hope it wasn't my client, but we really did. We've set up separate entities for them for each of those rental properties, but that's a huge. I mean, to have nine separate bank accounts and nine separate periodic reports to file every year and nine separate sets of files to maintain, it's like, it's a real nightmare. But on the other hand, they get the benefit of potentially siloing off the risk of each rental property from the other ones. I've had a lot of situations. As a litigator before I was an estate planning attorney, and it really was a big pain when I had one case one time involving a nursing home, and the guy owned probably 10 or 11 nursing homes, and so we were thinking, well, he should have assets, but the nursing home that our person got the bad care in was in its own LLC, so it really can work and kind of contain damage. And then going the other direction, sometimes people forget that too. Like if I have a rental property and I'm out driving to do whatever I'm doing, and I get in a car accident and I get sued personally, it's the same thing. Like I want that rental property to be separate from that too. So sometimes it goes the other direction. But the whole point is put this wall between me and this stuff. And basically the equation that you're looking at here is the more hassle I take on, the more protection I'm getting. Right, the less hassle I'm willing to take on, the less and there's got to be a line out there somewhere, right? I mean, so there are steps up from single member LLC, and I guess we'll talk about those in a minute. But I mean, this goes all the way out to like at the extreme end of things, like offshore trusts, and actual, like we discussed, right, corporations or something, like a Delaware corporation or something like that. And obviously, most people who own like a rental property or two are not setting up Delaware corporations and offshore trusts. So somewhere between single member LLC and offshore trust, there's got to be a line. It's different for each person as far as where their comfort level is, how much do they really want to take on, and how where are they sleeping at night. But we can discuss that in a minute here.
Right. So we talked a lot about risk and liability and stuff, and I'm sure a lot of people are wondering, what if they just get insurance for their rental property? Is that enough?
I mean, I always encourage insurance first. Everybody should, maxing out insurance might be too strong of a term, but a lot of insurance is good. And umbrella insurance policy on top of your homeowners, everybody should have that, even if they don't have rental properties. And then if they have a rental property, yes, whatever insurance they need to do that. But rental, insurance has gaps. It has limits. If you, for example, again, like one thing you could get sued for is if your tenant feels like you're not abiding by some term of the lease. Right. So a lot of property insurance is for property damage or for personal injury. Like your insurance company is not going to cover you in a fraud case, right? And again, you could have a situation where, of course, I would think it would be almost like a standard operating procedure. Like if someone gets injured on your property, your insurance company is going to say, well, you were negligent, so it's not covered by, and you fight that. But there's just, and then of course the caps on, if you buy $1 million of insurance, like that should cover, you think, most things, but certainly people can get injured or property damage can occur that exceeds that even. So, that insurance has its limits. Very important, necessary, but on its own is not going to cover every situation.
That makes sense. Okay. Sweet. So I think we're going to shift over to, if you're married, if you're two people that are married and decide to have a rental property or rental properties, and then you want to put it into an LLC. We talked about single member LLCs and multi-member LLCs. So if you have a husband and a spouse, or a taxpayer and a spouse, and they both own an LLC, technically they are each members of that LLC, so they should be considered multi-member LLCs. But I know like married couples can have the ability to elect as a single member LLC since they're married. I mean, what do you recommend, or what are your thoughts here?
Yeah, I mean, a lot of people, so the drawback to the multi-member LLC, and again, I'm getting into your realm here, is just that, yes, you have a partnership now, a partnership tax return that the LLC files. The single-member LLCs, of course, a disregarded entity. You report the income on your Schedule C of your personal tax return, and there's not really any tax consequence, or not any tax difficulty really with having that extra income. But once you get another member in there, even if it is your spouse, if it's a multi-member LLC, now it has a partnership tax return and it's issuing K-1s, and then you're reporting that income on your personal tax return. So you've got an extra tax return to do each year. And I find that with a lot of these things, these asset protection things, people are really excited. They come into the office, they're very excited to initially get this stuff figured out and feel like, yes, I'm now protected. And then after a few years of having to pay for an extra tax return, the enthusiasm, that's when I get the call saying, why did we do this again? I can't remember why I signed up for this extra tax return. Or my clients who are wondering, why do I have 9 bank accounts again? This is really something to juggle. So, but the reason people do it, again, getting back to my equation that, more hassle probably equals more protection. Again, imagine a judge who's looking at a business and trying to figure out, is this business separate from you, or is it just you? Is it really just a sham that you're using to try and, buy yourself, invincibility from our laws? And a LLC that has its own tax return starts to look a lot more like a business than a single member LLC that does not have a tax return. So just doing that is going to give you more protection. And if you have a business partner, so what happens a lot sometimes is, again, let's go back to my example where I'm out and I'm driving around and I get in a car accident and I get some sort of judgment entered against me that's somehow not covered by insurance, and now I've got creditors coming after me. And one of my assets is an LLC, and they want to get that LLC. They want to get the rental property that's in that LLC. If it's just me, again, it's like, okay, in Colorado, the single member LLC is kind of be considered my asset, frankly, in that circumstance. If it's a multi-member LLC, now I've got an innocent business partner who is not in the car accident. And, the judge is going to be a lot more, be like, well, we can't just hand over an LLC when we got this other person involved. And what they do is they issue what's called a charging order. And the charging order authorizes that creditor who's after me to step into my shoes as a member of the LLC and receive whatever income I would have received from the LLC. But they don't just get the LLC. And they also don't get any say in the management of the LLC. And so what that means is, me and my wife, if it's me and my wife who are the partners and the owners of this LLC, just declare like, we're not doing any income. We're not making any income distributions. So creditor, you can hang out here and get all the income that I would have received, but guess what? This thing ain't making distribution, so you're not going to get anything. So why don't you take 10 cents on the dollar and go away? So having that charging order protection is a very strong thing for multi-member LLCs that single-member LLCs don't really have in Colorado. And so that's why you might want a it looks stronger if you get sued by your tenant. It's stronger if you have a problem outside the LLC in your personal life. It's just but like I say, again, comes with more hassle. And, I get, so I'll leave it at that. And then, the next question is, okay, what if they have more than one rental property, right?
Yes.
Yeah. So I get this question too, which is, I bought one property and I've set it up in my LLC, and now I'm going to get a second property. Should I just put that into the same LLC? And again, you absolutely can. But now those two rental properties are in the same box. And again, there should be a wall between, that box has a wall between you and the rental properties, but the rental properties are under, to mix my analogies, under the same umbrella here. And so if one of them gets some sort of liability issue, the other one is now down there inside the same box there with it, and it is available for potential judgment purposes. So again, now we're talking about, okay, now I've got two LLCs. And if they're two single-member LLCs, maybe it's still minimal hassle. If it's two multi-member LLCs, now I got yet another tax return. Now I got my personal tax return and two business tax returns, right? So people start to lose their enthusiasm for that pretty quickly.
Yes.
And so, something we've done actually a few times is actually created a multi-member LLC. And then it is the single member of the single member LLCs. So we've got a single member LLC for every rental property that the person has. And the member of those LLCs is another LLC where the husband and wife own that. So they've got one extra tax return still, but all the rental properties are separated out from each other in separate boxes. The income from those LLCs is reported up to the multi-member LLC. It's got its tax return, and then it's issuing the K-1s. But so there is more hassle there, but it kind of is a middle ground between, again, having to have multiple tax returns. In that situation, so that's what I did with the client I keep mentioning. But again, even in that scenario, the best practice for them is, again, to maintain separate files for all 9 LLCs, have separate bank accounts for all 9 LLCs, and do everything they can to just, really make it clear to anybody who ever investigates, if that's you, which is what you did for the situation you just mentioned. If those people had come back and said, we've got these very clean books, these all are separate, they all get separate checks under separate leases with separate names and separate properties, they all go into separate bank accounts, and they are, it's much stronger. So
so just another quick side question there. Would it be legal or feasible to have that parent or holding LLC be the one that is collecting rental checks, kind of like a management company?
Yeah, I mean, it could, and again, so that's probably back down the spectrum a little bit as far as, okay, that is now simpler. And it's just, again, like, okay, all the money is in one spot. And so it probably lowers your protection a little bit, but also makes it easier. And that's, again, just the constant balance. Again, like I said, there's between this and offshore trust, there's a lot of options. Like your holding company thing could be like a Wyoming LLC or a Nevada, like some put into some jurisdiction that has better creditor or better protection laws for asset protection than Colorado does. And I always point out to people are always wondering, can I do that? Put my company or my trust in another jurisdiction, and the answer is yes. We're all kind of familiar with how every large company out there is supposedly headquartered in Delaware, and none of them actually have any headquarters in Delaware. If you go to Delaware, I assume Delaware is just like one massive collection of mailboxes that is, where all these corporations supposedly receive probably mail from the IRS, and that's about it. But Delaware's got really friendly business laws, right? So you can do the same thing. But if you set up your, again, so now you've got this very strong, multi-member LLC in Wyoming. But if it's doing business in Colorado, it's got to register there in Wyoming. It's got to have a registered agent in Wyoming, which is the person who would receive any papers for that LLC. And then it's also got to register as a foreign entity in Colorado every year. So, which I think is $100 every year. And so, more cost and more hassle, and again, more protection. So,
Okay. So now you have 2 filings you have to do each year. And so, I guess that brings us to our next question is what state should you set up your LLC in? I mean, obviously, the more simple answer is whatever state you have the rental properties in, right?
Yeah, and we definitely do have clients who do have rental properties in other states, and when we've done this, we have set up, we gone with setting up the LLC in that state because, again, it's very. I think it's pretty clear. Like if I have a rental property in Nebraska and I set up my LLC in Colorado, that's fine. I can do that. But then because I'm going to be dealing with tenants in the LLC and doing business in Nebraska, I'm definitely going to have to register as a foreign entity in Nebraska since it's not set up there. I don't know what Nebraska charges, but those fees are all over the place. Like you really got to investigate and figure out, okay, because like California, I think charges like $800 to set up an LLC compared to our $50.
Yeah, it's $800 a year after that too.
Yeah. So not too many people want, they'll lose their enthusiasm pretty quickly for that.
Right.
And then other states, like I say, at times Colorado's $1. I've had other states where it's like a one-time setup fee. I think it was Tennessee or something like that had a $300 setup fee, and then that was it. Like you don't have to pay every year. So it's a wide variety of possibilities. So that would really drive that decision as far as like, maybe it's not that big a deal to set up as a foreign entity.
So last thing here, are there other things that you can do, besides LLCs to, offer more protection for your rental properties?
Yeah, I mean, as I mentioned, there are different types of entities besides LLCs, so of course you've got trusts. There are things you can do. Again, having it titled to two people, even if outside an LLC, is probably a little bit more protection than just to a single person. But yeah, there are different, LLCs are by far the most popular thing now because, like I said, it's just the level of formality and the level of stuff you have to do after you formed your LLC is just so minimal. There are other options or maybe other insurance, ways to insure it or whatever else or title it. Yes. Definitely the LLC is the most popular way to proceed because of its ease and just the level of flexibility you have with all the questions that we just went over.
I think that's all we got for today. Thanks so much, Dan, for being willing to make this video with me. I will leave your contact info, if you don't mind, in the description down below. And be sure to just, for the viewers out there, comment, subscribe, like this video if you enjoyed it, share it with your friends who might think it's helpful. Thanks so much, Dan.
Okay, thank you.
I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a sticker. She picture perfect, so I told him I'm a flicker. Bill, I'm in the mood for a change up. I leave the city and return with my change up.